Good afternoon, and thank you for joining us today. My name is David Talbot, Managing Director and Head of Research here at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on uranium today, and we will hear from Skyharbour Resources Management, including Jordan Trimble, CEO of the company. During today's webinar, he will provide an overview and outlook, and then we'll take some questions. You can type your questions in the chat box at any time, and we'll get to as many as we can. But before we kick things off, first I need to read the fine print. During this webinar, forward-looking statements may be made. I would direct listeners to its forward-looking statements outlined on page 2 of Skyharbour's presentation. And this can be found on the company's website, skyharbourltd.com. And that's Skyharbour spelled out with an O-U-R at the end. So for Red Cloud Securities Inc., I'd highlight that this webinar is for information purposes only. It should not be considered as solicitation or recommendation to buy or sell securities. We note that this call does not consider a particular situation or needs of investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Skyharbour Resources. Now, before we get to it, just first a couple words. I think the nuclear industry is in pretty good shape. We forecast a supply-demand deficit as well. Fundamentals remain strong. We see demand continuing to rise and supply keeps falling. Right now, there's about a 50 million pound gap. Cigar Lake, it was shut down over the weekend again. Not a disruption that I'd call material, but certainly pausing for a forest fire shows you how much disruption one mine can undergo in this industry. On Friday, Kazatomprom also said it plans to maintain its 2023 uranium production levels, similar levels to 2022. So that means about 20% less, or 13 million pounds lower than expected production in 2023 as per the subsoil contract expectations. So this is about 10% of global uranium production that will remain offline. And this pullback is expected to remain in place until the market shows improvement. I think this is positive. Kazatomprom is showing much more supply discipline than most had expected it to do so. So meanwhile, we do have a spot price. It's rising slowly. It's up to $32.60 a pound. That's up only slightly on the $30 a pound uranium price from year-end 2020, despite all the activity this year. But I do believe the key is we need contracting, long-term contracting, to return. UX Consulting suggests there's about 1.4 billion pounds of uncovered uranium requirements between now and 2023. We certainly need higher uranium prices to incentivize that new production to either come back online, to be built, or to encourage new exploration for new discoveries. With that, I'm going to now turn it over to Jordan to update the audience on Skyharbour Resources. Jordan.
Great, thank you. Yeah, thank you, Dave, and it's a great high-level introduction of the uranium market. I won't spend a lot of time talking about the underlying supply-demand fundamentals. I'll get right into the story. So yeah, thanks everyone for joining. Good afternoon on the East Coast, good morning on the West Coast, and looking forward to providing an update on Skyharbour. I'm sure most of you, I can't see who's participating, but I'm sure most of you are familiar with the story. So you've seen that in the last several months here, we've had some pretty important news come out of the company as we gear up for what is going to be our most active and busiest exploration season to date. 3,500 meter drill program, which we started at our flagship Moore Lake project. We've expanded to 5,000 meters. This will be, by the end of the year, the most aggressive drill campaign that we've ever carried out at the project. We're looking at 8,000 to 10,000 meters of drilling. Needless to say, with the 3,500 meters to 5,000 meter expansion, we're quite happy with what we've seen early on in the program. I'll talk a little bit more about the three targets that we're drilling there. The first one being the Maverick East Zone. And for those of you who have followed the company in the last several years, that's really been kind of our hidden gem, if you will, and really what is advancing that project at the Maverick corridor with basement-hosted high-grade mineralization. But in addition to Moore Lake, you probably saw this morning, we announced with our partner company Azincourt a summer program that'll commence 1,000 meters of drilling. Unfortunately, they had a winter program that they were well into truncated due to warm weather, but they're going to complete that program with 1,000 meters coming up. But what's really exciting there is the 6,000 meters that they have planned in the winter coming up. We think they're on the cusp of a notable discovery there. Again, for those of you that follow that company, follow Azincourt, you'll see that with each drill hole, seemingly they're getting closer to a discovery. So again, as a large shareholder of the company and a minority interest holder in East Preston, we'll have exposure to that, to those programs. And last but not least, Valor, which is a new company that we've partnered up with, ASX listed. They're spending several $1 million at our Hook Lake project. We are a very large shareholder of the company, over 233 million shares that we've been issued, and we get some cash payments. You will see some news out in the coming weeks on Hook Lake. It's a multifaceted or multi-phased exploration program that they're carrying out in 2021. It'll culminate in a drill program later this year. So all in all, you're looking at about 15 to 20,000 meters of drilling across our property base. The bulk of that, good chunk of that being at our flagship, but the rest of it being funded by partner companies. And this is significant given the timing right now with the market. We've seen a notable resurgence in the uranium market. We've seen equity valuations increasing. I think it's still the very early innings, and we're well positioned to take advantage and to benefit us and our shareholders with this rising tide we're seeing in 2021. In addition to that, I just want to highlight a few differentiators and competitive advantages unique to Skyharbour. So first and foremost, one of the key takeaways from this is the re-rating potential that our existing asset base has. So if you look at the 6 projects that we've been opportunistic in acquiring over the last 7 years, these projects have had almost $100 million invested in them in historical exploration. At one point in 06-07, in the big uranium bull market, the mid-2000s, they were in a company that was valued at over $350 million. And right now we're trading at a 40 to 50 million Canadian market cap. So with the existing asset base, there is strong re-rating potential for Skyharbour. Secondly, we are actively delineating high-grade zones of mineralization. And so if you look at a lot of exploration companies, it's more grassroots or earlier stage exploration and exploration targets. At our flagship project, we are going in and we are delineating high-grade zones, multi-percent uranium mineralization. And so there's always the potential for a big headline hole to come out with any drill program. Now, with the most active drilling campaign planned, I'm confident and our team is confident that we'll be able to produce stellar numbers and add to the long list of good results that have come out of the Moore Lake project. And then the third point here, and call it competitive advantage that Skyharbour has, is our dual-pronged strategy to value creation. So we are first and foremost a exploration and discovery story. We're focused on delineating high-grade resources and making additional discoveries at our flagship Moore Lake project, but we do act as a prospect generator. As I mentioned prior, we've got a few companies that are actively exploring some of our other projects. We are in negotiations right now to option some of our other 100% owned secondary projects. So we have multiple irons in the fire. We offer discovery potential at several projects without having to go and continuously raise money to fund all this exploration on our own. So I'll get right into the presentation here. And like I said, feel free to ask any Q&A or put it in the chat there. We'll get around to that. I'll try to keep it short and sweet and keep time for the Q&A. Here's the disclaimer, forward-looking statements. As Dave mentioned earlier, I just implore everyone to go read this on their own time. Investment highlights. So people, timing, and projects. These are the 3 core pillars of success that we like to focus on with Skyharbour. As many of you know, with junior mining, the people are a huge part of the ultimate success of the company. So people, in our case, management, geological team, and strategic partners. We have 2 larger strategic partners, one in Denison Mines, They're our largest corporate shareholder. Dave Cates, the president and CEO of Denison, is on our board, so a very close working relationship with Dave and his team. Timing with the uranium market, as I mentioned earlier, I think our timing couldn't be better given the news flow and upcoming catalysts we have. And I think we're still, again, in the very early innings of a rising uranium market. And then the projects, 6 projects, all drill ready, 2 deposits, high-grade mineralization that we're going after, and a dual-pronged strategy to create shareholder value. So I'll just go, for those of you not familiar with the team, so you'll see my name at the top there. I'm the president and CEO. Come from a finance and entrepreneurial background. I was a corporate development manager for a gold company called Bayfield Ventures. We successfully sold that company to New Gold in 2014. That's when I started running Skyharbour with my chairman, Jim Pettit. I've worked with Jim here in the office for over 12 years. Jim's a 30-year veteran in the mining industry. We teamed up with our head geologist, Rick Kazmersky, and though I'm sure a lot of you are familiar with Rick, so we like to call him Radioactive Rick. He's credited with a number of discoveries in the Athabasca Basin, a 40-year veteran, focused expertise up north in the basin. So Rick was the exploration manager at Cameco before he went off and ran his own company, JNR Resources, ultimately selling that company to Denison Mines before joining us at Skyharbour. Dave Cates, who I mentioned, director Skyharbour, is the president and CEO of Denison. Again, a very close working relationship with our team and Dave and his team. Paul Matizik needs no introduction. Paul's built and sold 5 companies, mining companies in the last 15 years. He's an advisor. Ultimately, at Skyharbour, we are looking to sell the company. We're looking to create value through discoveries and through strategic partnerships in a rising uranium market, and then ultimately looking to sell the company. And that's where Paul and the director you'll see at the bottom there, Joe Gallucci, will come to play an important role. So Joe is, for those of you who don't know Joe, he's a managing director and the head of mining investment banking at Laurentian Bank. He's worked with a number of uranium companies. Dave and him go way back as well. So Joe is a great addition, brings a lot of capital markets experience to the board and to the management team. And just rounding out the technical team here, I'll just point out Dave Billiard and Christine McKechnie. Again, both have had illustrious careers in the Athabasca Basin, focused on uranium exploration. And that's a key point with our technical team, is it's very much geared towards high-grade uranium discoveries in the Athabasca Basin. They've done it before, and they'll do it again here with Skyharbour. So moving on to the cap structure. So 118 million shares issued and outstanding, pretty straightforward. We trade between a $45 to $50 million valuation. Just on that note, you'll see I've been purchasing shares in the open market as of late. The recent pullback, we saw some quarter-end rebalancing and just a kind of a general pullback in the uranium space. We also had a batch of warrants that were expiring here. Most of those have now been taken down, and you'll see the treasury in great shape. We have $9 million in cash and stock, so we're fully funded right through until the end of next year with all the exploration and drilling plans we have. Notable and strategic shareholders, you'll see management insiders, Denison, and then just a couple of other notable institutional investors. We have seen this increase in the last several years. That's I think a big selling feature of the uranium industry, is that because there are very few active or surviving uranium companies from the last 10 years, it's not a crowded space, and money that's interested in the sector works its way down to the small and micro cap names relatively quickly. We've certainly seen that most of the money that we've raised in the last several years has been through institutions, but we've also seen them more recently purchase in the market. And I think that's a trend we'll continue to see. Okay, so Dave did a pretty good job going through the uranium market. I won't spend a lot of time on it. Covered a couple of the key points, including the announcement from Kazakhstan, the fire at Cigar Lake. But one thing I do want to highlight is this recent trend that we're seeing. Actually, a couple of mega macro trends that we're seeing that are certainly benefiting the nuclear industry and the uranium mining industry. One being the electrification globally that we're seeing and the increase in electricity demand. It's been increasing significantly. Obviously, electric vehicles adding to that, but second to that is decarbonization. That's what's really sparked this sector in the last year and brought a lot of new ESG and generalist money into the space, as seemingly every country in the world now is planning to decarbonize their economies, decarbonize their electricity grids. Nuclear as the only scalable baseload CO2 emissions-free, low-cost source of electricity will have to play an integral role in this energy transition from a carbon-intensive energy generation and grid to a carbon-free one. And there's really, I think, no debate anymore on this. It's going to have to be continuously adopted by countries that are serious about these decarbonization objectives. It is. We talk about renewables. It's a good complement to renewables are a good complement to nuclear, but nuclear is not intermittent. It's baseload, and it's here to stay. I'll just move ahead to just quickly, again, I don't want to get too into the weeds on it, but just going through the supply-demand fundamentals. So over 440 reactors currently operating, over 50 reactors under construction, over 400 reactors ordered, planned, and proposed. We saw in 2020 annual demand of about 180 to 185 million pounds of uranium. That's in the backdrop of decreasing primary mine supply. So you'll see 163 million pounds in 2016. That's decreased to about 120 to 125 million pounds in 2020. Now, we did see supply disruption from the pandemic, and obviously we'll see some of that. We've seen some of that production come back online. But as Dave pointed out, there are these potential supply side shocks and risks, like we've seen with Cigar Lake with the fires. And I think the key takeaway is that the risks to the supply side far exceed the risks to the demand side. The hit to the demand side through the pandemic was relatively negligible. Nuclear reactors are really the last source of electricity generating facilities that you'll shut off if electricity demand decreases. So again, there's been this major supply side response and rebalancing that we've seen play out over the last several years. Just one last note on this slide is the uncovered demand. You'll see that chart. You've probably seen this in a number of presentations. 40% of demand in 2025 is uncovered. So this just shows that the utilities will eventually have to come back to the market. And we can talk a little bit more about that in the Q&A if we want to, but I'll move forward here. So nuclear and uranium demand globally, I think it's important to highlight some of the key players globally here. So China, as we know, has really been at the forefront of growth in nuclear energy and uranium demand, planning to triple their capacity by 2030. The recent 5-year plan included 70 gigawatts of nuclear energy by 2025, up from the current 48. They are trying to go carbon neutral by 2060. It's a tall order. But that's their plan, and nuclear energy will have to play a significant role in achieving that goal. India plans for 21 nuclear reactors by 2031. Russia has the Build, Own, Operate program. They're exporting their nuclear industry, constructing 36 reactors abroad. We've seen some good news out of Japan recently with another restart there. They are still trying to get 20% of their electricity generation from clean energy sources and nuclear. So by that account, they'll have to turn on about 30 reactors. And then last but not least, and probably the most topical right now is the U.S., still the largest consumer of uranium through their 96 operating reactors. We all know that the U.S. struggles to produce enough uranium for even one of their reactors, having to import most of their uranium from Russia, Kazakhstan, and Uzbekistan, almost 40% from those countries. And that's where countries like Canada and Australia, I think, have a role to play. We can offer that secure supply of uranium going forward. For the first time in 50 years or so, we're finally seeing bipartisan support for the nuclear industry in the States, which is also very important. So just wrapping up, uranium supply globally, Dave touched on this. We just saw the announcement out of Kazakhstan extending production curtailment through 2024. We could see that continue even further. That's 13 million pounds of uranium that's no longer coming into the market in 2023. So that's a significant amount. You'll see here recently, developers and physical holding companies have been in the market, have been buying hundreds of millions of dollars worth of uranium. Denison, Yellowcake, UEC, and just recently, we're all familiar, I'm sure, with UPC now becoming the Sprott Physical Uranium Trust. I think that could be the catalyst for a much higher spot price in the near term. That's happening here in the near term. So looking forward to that. And bottom line is there's accelerating inventory and secondary supply drawdown. So that big 40 to 60 million pound primary mine supply deficit is having to be met with secondary supplies, and that can only last for so long going forward. So I'll get right into the projects here. Maybe we can just spend a quick second on this slide. Why the Athabasca Basin? Again, I'm sure most of you are familiar with the basin, but it is the highest grade depository of uranium in the world. It's really the Saudi Arabia, if you will, of uranium. You'll see at the bottom right here, this is an important little diagram for what we're doing at our flagship project. So you'll see the types of deposits. This is just a simplified version of it, but you'll see kind of the two main deposit types. So you've got sandstone or unconformity hosted deposit. And actually, I'll just draw a little line here to show this. So the sandstone or unconformity hosted deposit, and then the basement hosted deposit. What's exciting for us at our flagship project, Moore Lake, right now is most of the historical exploration that's been carried out, and there has been a lot. There's been about 70 or 80 million in historical drilling and exploration. Most of that has been focused on sandstone and unconformity hosted deposits, with very little drilling having been carried out into the underlying basement rocks. And I'll talk bit more about that as we get into the project and what we're doing with the current drill program. But keep that in mind because most of the recent discoveries like NextGen, like Fission, like the Griffin deposit that Denison has, a handful of others that have been made more recently, these are all basement hosted targets. And our ability to target these basement zones, these structurally hosted high-grade uranium deposits has improved dramatically in the last 15 to 20 years. And I'll talk a bit more about that actually in this slide if we just look at some of the recent discoveries here. So these are a couple of charts that some of you are probably familiar with. This just shows the value creation of high-grade uranium discoveries in the Athabasca Basin. I'll note that all of these discoveries were made in a declining commodity price environment. So it's quite exciting when you're able to vector in on one of these high-grade big uranium deposits in the basin, because even as the commodity or the metal price is declining, you can generate significant returns delineating these resources. And again, as I said, one of the key things here is that there's some new techniques and exploration methodologies that have been used to vector in on these deposits to bring your discovery costs down without having to go in and continuously drill holes to 200-300 meters, hoping that you find the proverbial needle in the haystack. And that's something that we take pride in at Skyharbour. We're using these new techniques and methods to hone in on higher grade basement hosted zones of mineralization. And we're having success just in the first few programs here at the Maverick Corridor. So just taking a step back here quickly and finishing off with the projects and a high level summary or overview of the projects. Here is a map of the Athabasca Basin. As I mentioned, 6 projects scattered throughout the basin. We offer exposure to both the west and the east side of the Athabasca Basin. We have 2 deposits. We have high-grade mineralization at several of the projects. As I mentioned, these aren't grassroots projects. They're all drill ready. Most of them have several dozen targets on them. They're big property packages. We've got collectively about 240,000 hectares of ground, as you'll see there. And what you'll see is this, as I mentioned, this dual-pronged strategy. So again, our focus being at our flagship, I'm just going to circle it, Moore Lake project right here. where we're actively exploring. We own 100% of it, but we also act as a prospect generator, and we've optioned out joint ventured out 3 of our other properties, and we're actively looking to bring in partner companies at some of our other projects that we own 100% of. Talk a bit more about that after we go through the current drill program at our flagship project. So skip ahead here. So here is Moore Lake. It's a big property, 36,000 hectares. Again, we own 100% of it. On the eastern extent of the basin, it's proximal to mining infrastructure, including roads, power, and mills. We've got the Wheeler River project, Denison's flagship development project, about 15 kilometers to the west. The haulage road to MacArthur goes up just to the west of the property boundary as well. You'll see this image here. So this just shows some of the primary targets on the project. Historically, most of the exploration was carried out at what's called the Maverick Corridor. You'll see this circled here. So the Maverick Corridor is a 4.7 kilometer long conductive, fertile, uraniferous corridor. It's had lots of drill holes put into it, but as I mentioned, very few drill holes that were specifically targeting underlying basement rocks and the targets in these basement rocks. That has been the focus for us with the last couple of smaller drill programs that we've carried out, but now with this year with our largest drilling campaign planned, a big chunk of that's going to be focused at finding higher grade deposits and zones of uranium mineralization at depth in the underlying basement rocks. Just I want to draw your attention now to a new target. So you've got the Maverick Corridor. Maverick East is where we're drilling currently. You've got the Esker target, which is just up to the northeast. It's about 5 kilometers from the Maverick zone. And then you've also got this new target, which for those of you following the news, you'll see we've highlighted this in our last news release, this Grid 19, which is just up right here. And what's significant with Grid 19 is it's a new exploration, relatively new exploration target. It has had a couple of exploratory drill holes put into it in the past, one of which was lost. Another one actually intersected anomalous mineralization. They did not do a lot of follow-up work on it simply because they didn't have a great understanding of the target. Well, we carried out some newer geophysics, some modern geophysics earlier in the year. And what's significant about this target is we've identified a pretty major break or structural disruption in 2 major conductive corridors. And that's where the Grid 19 target is. So that's exactly what you want to be seeing when you're making these discoveries, conductive corridors, and then a break or a flexure or disruption in those conductive corridors. So we're quite excited to go and test that Grid 19 target. We'll probably drill maybe a quarter to a third of the program there. But again, the focus will be back at the Maverick Corridor. And I'll just move ahead here to where we're focused. So here's a slide that shows a little more zoomed in image of the main Maverick and East Maverick zones. So you'll see a lot of drilling that's been carried out, but again, most of that drilling just down to about 250 to 270 meters. The basement rocks lie at about 280 meters. So the targets that we're drilling in these basement rocks at the East Maverick zone are still relatively shallow. We're looking at between 300 to 400 meter target type. Just a quick history on the main Maverick zone. So the main Maverick zone was discovered in the late 90s by Rick, our head geologist, and his team. They did a great job delineating small high-grade lenses of uranium mineralization right in the sandstone at the unconformity, 4% over 10 meters. We then took, when we took the project over in 2016, 2017, within the first few programs, we announced some of the highest grade drill results ever drilled at the project, including 21% U3O8 over 1.5 meters, 6% U3O8 over 6 meters. We then made a new discovery at the East Maverick zone, which you'll see just over to the east of the main. And that was 9% over about 1.5 meters. So we had early success, but again, most of this drilling focused in the sandstone and not much deeper into the basement rock. Just with the last few years of drilling and additional geophysics and field work that we've done at the project, we've been able to properly refine these basement hosted targets. And so you'll see in this last program where we announced results late last year and earlier this year, we after a 2,500 meter drill program, we announced our longest continuous zone of uranium mineralization at 0.72% U3O8 over 17.5 meters. Within that, 10 meters of 1%. Now, the important part here is that's all basement hosted. And as we continue drilling down plunge at this new East Maverick zone, we see the tenor of mineralization increase. We see the size of the structure and the zone of mineralization increase. So we really feel like we're on to a new discovery and additional resource delineation at this main and East Maverick zones. We are working towards a maiden resource estimate. We should have one out later this year, early next year, after we complete these next phases of drilling, but we still feel there's a lot that we can uncover with another 8,000 to 10,000 meters of drilling over the next 8 to 12 months. So that covers the flagship project. As I mentioned, it's an exciting time for us given the size of the program and given the work that's been done over the last several years to vector in on these basement hosted zones of mineralization, these feeder zones for the known high-grade mineralization in the sandstone. I will note too, there are some new mining methods that are being proposed for basin deposits, including ISR, which Denison's looking at for the Phoenix deposit, and Sabre, which is a joint venture proprietary mining tech and method that is being developed by Orano and Denison, two partner companies of ours. We're watching closely because there are potential applications at our project at the Maverick corridor. So in addition to new techniques and methodologies being used to make additional discoveries in the basin, we're seeing some new thinking come in terms of how we actually mine these deposits. Just moving on, so this is the prospect generator part of the business. As I mentioned, we have three current partner companies, one of which is industry leader Orano. They've now earned in at our Preston project 51%, having spent just under $5 million in exploration expenditures, some cash payments. It's been a quieter year because of COVID on the project, but we expect an update from them in the coming months and in the new year. Moving on to East Preston, we have a joint venture partnership now with Azincourt, as I mentioned earlier, announced a fairly bold drill program over the next 6 months, 1,000 meters now, and then 6,000 meters in the winter, later this year, early next year. They've completed their 70% earn-in. We retain a minority interest and we're a shareholder in the company. And as I mentioned earlier, they've done some great work to vector in on potential high-grade zones of uranium mineralization. They did announce in their last program elevated uranium and anomalous uranium in some of the drill core that they pulled in what was a relatively small program in the 1,200 meters that they finished earlier in the winter. So looking forward to them getting back to work there. And again, as a shareholder of the company and a minority interest holder in the project, we benefit with any exploration and discovery success that they have there. Hook Lake, for those of you that have been following in the last 8 or 9 months, saw this news initially announced in December. We brought in a new company, ASX listed Valor Resources, run by a very strong management group out of Perth. They've come in to option 80% of our Hook Lake project. They have to spend $3.5 million over a 3-year period, just under $500,000 in cash payments over that period, and they've issued us just over 233 million shares of the company, valued at over just 2 million Canadian. What's great about this partnership is it brings a new group, some new eyeballs to the project, but it also there's a target at this project, hence the name of the project, called Hook Lake, that has a 68% U3O8 surface showing, a massive pitch blende outcrop that's been really an enigma for decades now. We did a little bit of work there, some groundwork when we had 100% of the project, but the thought there is that it's a blast out from some deeper structure. If they can go in and they can find that structure and drill into it, it'll probably be a pretty major discovery given the grade of mineralization right at surface. So again, very excited for them to get to work. They have a multi-phased exploration program. They finished phase 1. There'll be announcements out on phase 2, and then ultimately culminate in a phase 3 drill program later this year. So I'll move, just wrap up here. I just want to save some time for Q&A. So South Falcon Point is 100% owned by Skyharbour. It's you'll see on the map here just south of our flagship Moore Lake, and it's the southern, call it 2/3 of below Hook Lake. This project has a NI 43-101 compliant inferred resource, 7 million pounds, lower grade at 0.03%, but right at surface. We are looking to carry out a small drill program at this project potentially later in the year. We are right now talking with interested potential option partner companies or joint ventures partner companies on this project. So if we are unable to get a deal done, we will likely go and continue to advance this project on our own now that we're well funded to do so. We did a little bit of drilling here in 2015 below the existing resource, and we were finding higher grade mineralization at about 150, 200 meters deep. So that is something that we would like to follow up on. But like I said, this is as a part of our prospect generator business. We own 100% of it. We would like to find a strategic partner to come in and help advance this project. The same goes for our Man Lake and Yurchison projects. You'll see here, again, both on the east side of the basin. Yurchison is on trend to the Janus Lake project, currently under option by Rio Tinto from Form. They're carrying out a $30 million program at that project. You'll see we have all the ground, most of the ground staked along strike to the northeast of Janus Lake. Again, a project that we would like to option or joint venture out if we can. And then last but not least, Man Lake, again, looking to find a partner company. And right now, currently in advanced negotiations with 2 companies on this, 100% owned, drill ready, a project that's strategically located on the eastern side of the Athabasca Basin, just southwest of MacArthur and adjacent to another project called Man Lake, where International and Exco, Cameco and Arano now made a discovery back in 2014. Denison ended up buying a 30% stake in that project. So it's a great asset for us. It ties in nicely with the rest of the portfolio, and we're hopeful that we'll get a partner company working on this project in the coming months here. So just to wrap up, recent milestones and upcoming catalysts. You'll see the last few years we've been quite busy for the company. Transformational deal back in 2016 with our now partner Denison Mines to acquire a flagship Moore Lake project. The initial few years after acquiring that project, we were focused on the Maverick corridor, drilling into the sandstone and unconformity hosted targets. More recently, with some new modern exploration techniques, we've more properly refined basement hosted targets. So the focus has shifted to that. So with upcoming catalysts, continue drilling it more with a focus on these new and refined basement hosted targets and some other exploratory targets on the project, including Grid 19. Exploration programs funded by partner companies, including Arano, Azincourt, and Valor, and look for additional joint ventures and option partnerships in the coming months here. The market's responded quite positively to when we've announced new partners coming in. If you look at the last several years, we're getting close. And again, this just adds to the news flow for Skyharbour. It brings in some cash and stock to augment the already healthy treasury and allows us to stay focused on the core assets. And just a final note on the uranium market recovery, as I'm sure a lot of you are familiar with the market. I think we're in a great position with a number of differentiators, a relatively low market cap given the asset base, and a lot of upcoming catalysts to benefit from this continued resurgence we're seeing in the uranium space. So I'll hand it over. That's the presentation. I'll hand it over to Dave for some Q&A, and happy to answer.
Great. Thank you very much, Jordan. Great presentation there. So we will now kick off the Q&A portion of the webinar. Reminder, everybody on the line, you can type your questions into the chat box at any time. We already have a few questions here, Jordan. Now, you demonstrated the Athabasca uranium investment thesis quite well. High-grade uraniums tend to move share prices higher, even in weak markets. How do you see Skyharbour situated in this paradigm? Would you say that your company is still in the discovery phase, or do you see your company that's already delineating mineralization at Moore Lake?
I'd say a bit of both, and that's again, what I wanted to highlight with the re-rating potential for the existing asset base. And Dave, you did a great job covering this in your report, right? So we do have pounds in the ground. We have a resource, and 43-101 compliant resource at South Falcon Point. We are working towards a maiden resource at the Maverick Corridor at Moore Lake. We know we have pounds in the ground. You've got high grade mineralization there. It's just a matter of how big it is. So we are, I'd say, they're more advanced stage exploration assets, but what everyone likes to see in the basin are these big headline drill holes, and so that's another kind of key takeaway, I'd say, and an investment highlight for Skyharbour is we are offering exposure to that. You can never guarantee exploration success, but if you look at just even the first few holes we drilled in these basement rocks at East Maverick, and you and I, Dave, have talked about this, we just didn't have the ability to properly target these basement hosted zones up until recently. And now we're finding, 17.5 meters of 0.72%, 10 meters of 1%. I'm confident we'll have some more high grade mineralization, and we offer that potential for there to be a major headline drill hole, which is, as we showed that one in the one slide there, it generates major returns for shareholders, especially in a good uranium market.
Mm-hmm. Okay, and I think we'll come back to that in a minute. But what do you see the benefits are to Skyharbour if one of your partners hit significant uranium?
Yeah, and that's a great question. And there's I guess the easiest way to kind of summarize or answer that is we'd rather own 15 to 20% of something than 100% of nothing, right? And so 15 to 20% in the project, but also our shareholding in the company, right, is worth a lot of money if you make a discovery. Again, you look at the valuations on major discoveries that have been made in the basin in the last 15 years, NextGen, Fission, Hathor, ISO more recently, 15 to 20% of those is significant. And so we try to, with our prospect generator business, offer as much exposure on several different projects to these high grade discoveries. But another key point to the prospect generator side of the business is, when we talk about people, we talk about technical expertise. It allows us to leverage other teams, other groups that may come in and look at a project differently or may have some different ideas. And that's, I think, something that gets overlooked as a big benefit of prospect generation. It's not just our team. Our team is great. They do a fantastic job, but it helps having several groups and several teams look at these projects. And that's what this allows us to do.
Okay, great. Thank you. And I guess now back a little bit to the geology, maybe could you tell us a little bit more about your exploration and discovery methodology at Moore Lake? It looks like your focus has been shifting towards basement hosted deposits away from sandstone hosted deposits. Is that something that you're thinking about? Yeah,
so certainly I'd say the bulk of the drilling, at least this year, will be focused on basement hosted targets, but you can go after both target types when you're drilling, right? So you can drill right through the sandstone and kill two birds with one stone, drill through the sandstone, through the unconformity into the basement rocks. We will be doing some of that. I think the getting back to the exploration method and technique, there's a couple of talking points there. One is our ability to vector in our toolkit, if you will, to vector in on these deposits has improved dramatically in the last 15 years, whether it's the geophysics, whether it's just a better understanding of the geochemistry, the indicator minerals, and then really a paradigm shift in the deposit types we're looking for. So 20 years ago, a lot of the exploration was focused on, as it was at our flagship, focused on sandstone or unconformity hosted targets, whereas now a lot of companies looking a little bit deeper into the basement rocks. And so these are relatively untested targets, and so there's a lot of blue sky potential with them. And so we're using these techniques in this kind of new way of thinking about the exploration and the deposit types in the basin. Now, I will make one final note on that. It's not to say that we're getting away completely from sandstone or unconformity hosted mineralization. We are still looking for that for these high grade lenses, but our thought on it is that the larger deposits are going to be in the basement rocks, whereas the smaller high grade lenses are going to be in the sandstone or the unconformity as we see currently at the Maverick corridor. But with these new mining methods, even those small high grade lenses are interesting. So we're not totally abolishing our efforts to look for these sandstone hosted deposits. We're focusing more of the meterage on basement.
Mm-hmm. Okay. And typically one leads into another even. You look at Shea Creek or Rough Rider, those are perfect examples of unconformity sandstone hosted that sink down into the basement rocks.
Correct. Absolutely.
Good. Okay. The Grid 19 target, geophysics shows a disruption and I believe it's EM anomalies. Have you found any structures, alteration, anomalous uranium there or nearby?
Yeah, we have. So, I spoke a little bit about it. So 2 drill holes that were drilled there historically, one of which was lost in, which is, it's not great to lose drill holes, but as we know in the basin, it sometimes is good to lose drill holes, and it was lost in alteration in clay, and it's usually a great indicator. The second hole actually did hit, I believe it was about a meter of 0.1%. And that was it. And there was no follow-up work, right? So that's pretty significant, given that it's never been drilled. It was a poorly understood target. As I said, we did the geophysics there earlier this year, and they really didn't know what was going on there. We now clearly see there's some major disruption and intersection of 2 major corridors, and so that is the perfect recipe for success or for potential exploration success and new discovery success. So we're excited to get to work there. We're going to be testing the sandstone unconformity and basement at the target with several holes. And if we find something, it's a bona fide new regional discovery at Moore Lake.
Okay, yeah. Fluids love broken rock, but drill rods hate broken rock. So.
Exactly.
You mentioned that Moore Lake would be suitable to provide a resource estimate maybe this year, early next year. Did you have a minimum size target in mind before you decided to complete a resource estimate?
It's a good question. I know we're trying to get numbers out here, but I mean, look, we like I said before, we do have a back of the napkin idea. Needless to say, we'd like the number to be as large as possible, given where we're at in the discovery process, especially at East Maverick. I think we have a lot we can add, especially in the basement rocks, and provide a global resource. So I can't give out numbers until we've got 43-101 complete. But needless to say, that will be a significant milestone for the company, and it's going to be within the next 12 months.
Okay, and do you have any plans for other projects in your portfolio that are currently not under option or in JV with other companies?
Yeah, and we do. We are looking at a small drill program at South Falcon Point. Again, this does host an existing deposit. We were pretty pleased with the results we had back in 2015. It was, we announced these results at the bottom of the uranium market, so that the market kind of took a pass on it. But we think there's strong, robust additional discovery potential there. If we don't find a partner company, we'll likely carry out a small drill program there later this year or early in the new year.
Okay, and if you did want to bring in a partner there, what kind of terms are you looking for in order to conclude the agreement?
Yeah.
Either there or else?
Yeah, so as you've seen, most of our option agreements have been structured whereby the optionee can come in and earn somewhere between 60-80%. We retain a minority interest. We like to take stock. Again, I get back to this re-rating potential in the sector as a whole. I think that these companies in this still the early innings. I think this rising tide will continue, and we want to have exposure to several different companies through prospect generation. So we'll take stock, some cash, and then we obviously, the key thing is exploration. We want to see the project advanced. That's really the main value driver, is new discovery and resource delineation at these projects. So we usually build in a 3 to 5 year work program, exploration expenditure requirements each year.
Okay. And are you still searching for new projects? And do you find that your competition, other juniors, is still trying to do the same?
Yeah, it's a good question. We're always looking, right? We're always looking for projects, and we've got a handful of new properties that we've looked at that we think can add to the portfolio. We're not as interested in building or adding, kind of bolt on more exploration, earlier stage exploration assets. We'd like to find something that's it may be an exploration project, but a more advanced stage exploration project, much like Moore or Hook Lake or South Falcon Point. But look, if we find the right project and the right deal, you'll see an announcement.
And would you consider looking at projects outside of the Athabasca Basin?
We have, we again, one of the things that we've been a mandate of ours and that we've really been focused on is being opportunistic. As the market gets better, it's tougher to do that. A lot easier to do that, obviously, in 5-6 years ago. But we also have more cash. We have a better currency to go out and transact on these properties. And like I said, if it's the right deal, if it's an accretive deal for the shareholders, we will pull the trigger on something. We are, we want to try and keep it Athabasca Basin focused, but again, for the right deal, we will look at anything.
Okay. And then a few corporate questions here to wrap up, Jordan. Not sure if you can mention this unless it's public knowledge, but is Sachem Gold still a shareholder?
Yeah. They've been investing in our financings basically over the last several years. Well-known institutional uranium investor, Mike, and the team have done a fantastic job, being not just obviously a supporter of these companies, but a cheerleader for the space. And you'll see, as in that cap structure slide, you'll see a list of other institutional and strategic shareholders.
Okay. And you trade on the TSXV, the OTC, and Frankfurt. Where's your liquidity, or where are most of your shareholders residing these days?
Yeah, so if you look at the volume breakdown, still a big chunk on the TSXV, but we have seen in the last several years through our OTCQB listing, about a third of the volume coming out of the US. And we do see now, and we have in the last 8 months, more volume come out of Europe as well. So I think you'll see that diversify over the coming years, especially as there's this renewed interest in the space. And as we see more ESG and generalist money globally come into the space, we have, I will note, we have seen the liquidity increase quite significantly in the last 8 or 9 months, and we're seeing it come from lots of different countries and parts of the world.
Okay. And can you elaborate a little bit more on your relationship with Denison? Does it still have rights at Moore Lake?
Yeah. So Denison is, as I mentioned, our largest corporate shareholder. There is still a clawback, but we're coming to the second part of that where it can be extinguished. We're nearly there. But again, I'll emphasize that we maintain a very close working relationship. Obviously, Dave being on the board, and they're focused on development at Wheeler, and we're an exploration company, and there's several projects that we're looking at, and I think that part of our story, it's been an important one, continue to be an important aspect of our story. They're one of the better uranium companies out there, in my opinion, and we're happy to have them as partners.
Okay. And final question for today. You did talk about your exit strategy in a couple of instances, but at what point do you decide to sell the company versus vend out individual projects that might have become company makers?
Yeah, it's a good question. So ultimately, the end game is to sell the company. We, in the interim, are executing on this prospect generator strategy and part of the business. But yeah, we would like, I would say, within the next 3 to 5 years, if that, I mean, even sooner if possible, to sell the company. Ideally, we see a continuously improving uranium market. We value add the projects, and at some point down the road, larger company comes in, and we get a deal done that makes sense for everyone.
Okay. Now, if you do go out and get some a larger stage project, a more advanced stage project, might that change?
Yeah, I mean, it could. I mean, I'd say ultimately the acquisition, if we go and we do that, we would have to see, obviously, that would be the right deal, creative deal for the company. We'd have to see some near-term value creation potential from the project, because I do believe that in the next 2 to 3 years, we're going to have a pretty substantial run in the uranium market, move in the uranium market, and you want to strike while the iron's hot. So we want to make sure that within several years we can go in and create value at the project. And then ultimately it is ultimately everything's a means to an end. If your end goal is to be acquired or taken over, then that would be one of the means to that end. So that is something that we would consider with potential acquisition down the road.
Perfect. Okay, well, why don't we wrap it up there? Thank you, Jordan, for joining us today.
Thank you. It was a pleasure.
Okay, thank you everybody else for tuning in. Reminder, the Red Cloud Securities will be back tomorrow afternoon when Taylor sits down with West Haven Gold. That's July 7th at 2 p.m. Eastern. Have a great day, everyone. Thank you very much.